Hello guys, what's up? How you doing? I hope you had a fantastic weekend, a fantastic, refreshing weekend. Ready to face the market this week? In this video, what we're going to be looking at are the fundamentals of the week, some currency pairs, major currency pairs. We're also going to be looking at some indices. Most of y'all have recommended Volatility 75. I like that. And of course, other indices as US30, NAS100, and commodities like gold. Also, we're going to be looking at CADJPY. I sent this trade on the free group last week. Some of y'all asked me, I think it was one person who asked me, so what was the lesson out of that trade? Because it actually hit the stop loss. So also going to be looking into that. So without further ado, let's dive right into it. So we're going to start with the fundamentals of the week. Today it's Monday. We're going to see that the United Kingdom, it's a bank holiday, so I won't be expecting any volatility on the pound pairs, but we have the US pending home sales later on. Tomorrow we have CPI for the euro, GDP for the CAD, consumer confidence for the US, GDP for the Aussie. So it's going to be a crazy day because almost in every session they're going to be a fundamental. On Wednesday, we're going to have manufacturing PMI for the pound and the rest of the US fundamentals. And with the non-farm employment change, which is a great indicator for the non-farm payroll, which will be on Friday. NFP, baby, NFP. On Thursday, we have initial jobless claim for the US and retail sales for the Aussie. On Friday, we have composite PMI for the pound and service PMI for the pound too. The rest of the US fundamentals, with the strongest one being the non-farm payroll and employment rate just behind it. So as you can see, the whole week, we're going to be having fundamentals for the US, meaning that the US is going to be the most volatile pair of the week. And with the US dollar controlling over 80% of the transactions, the Forex market, it's going to be a crazy volatile week. You can bet on that. So without further ado, let's dive right into the charts. If you're new to the channel, guys, don't forget to hit that like button, subscribe, and just hit that bell notification so that you'll be notified whenever we release future content. So this is the US dollar. Obviously, it makes sense to start with it. So as you can see on the US dollar, we have prices creating a downtrend. We had a high, and then prices created a low, and then a lower high, and then a lower low. So that means the trend is a bearish trend, and it just broke below this market structure here. So I placed the Fibonacci extension, giving us these beautiful exit points. This will be our first target, and this will be our second target down here. So I'm expecting to see prices retrace a bit here into the zone before I actually go short all the way to around 1920, 11,920 at around here. And then our final targets down here. So the US, obviously, I'm expecting it to be bearish in this coming week. Hopefully, the fundamentals won't interrupt this price action move, right? Okay, so let's look into other pairs. We have USDCHF. USDCHF, I'm expecting to see prices fall to around this market structure here, support area, before it actually bounces to this market zone here. It's actually from this daily structure here, because as you can see, prices are in this triangle. So prices are in this, if you see here, it's an ascending trend line. So if prices reach here, it's a support area, and if it finds this triangle trend line, ascending trend line, it will bounce off it, and actually, I think it will reach all the way until here to look for more resistance. So this is actually my move on the US base, because as you can see that the US is also going to be weak for this trading week. Now, let's look into USDJPY. Obviously, this is from the daily perspective. Let's look into the 4 hours. So I'm bearish based on the US, as you know. So in this currency pair right now, as you can see here, price is actually just consolidating in between these two price ranges here, right? It's a consolidation. So I'll be waiting for a breakout out of this prices, if they break below here, and which I expect them to do, I'll be taking a short all the way down here. But if prices do break above here, then I'll be bullish biased by then. So what I'm expecting to see in this currency pair is for prices to break below here. That will be my confirmation, and I'll take my trade to sell all the way to around 108. Okay. Now let's look at EURUSD. Obviously, it's going to be bullish bias because the US is bearish. So EURUSD, as you can see here, prices are now on resistance level after breaking above on Friday with this bullish, beautiful bullish engulfing candlestick above this descending trend line. And right now, prices are in this structure here. So with the US being bearish, I'm expecting to see prices keep on pushing higher, with this being my first target, obviously. So I'm expecting to see prices, if they break above here, give me a sweet retest for me to buy. But if they do, first come back down here to retest previous broken market structures at around here, then I'll be waiting for them to come back down here. And after here, then we'll actually just be looking to buy, right? So these are my two scenarios on EURUSD. We have GBPUSD, same as EURUSD, I'm bullish biased. So I'm just expecting for prices to, waiting for prices to actually break above this trend line in this zone before I actually buy all the way to around here, which will be my first target. So now let's look at CADJPY first and foremost and see what mistake we made or what we could learn from the trade. Obviously, there are never losses, just mistakes. CADJPY, there it is. Now, we took the trade after it hit this resistance level, which was a good thing because we took a trade off a market structure. So 1 point for us. And it gave us this confirmation, which was a bearish engulfing. So it's a good thing again, right? But after that, prices just went above and hit a stop loss, stopping us out, right? Now, it was a support zone. Prices broke below this ascending trend line, and it was a 0.618 Fibonacci key level. So all the things right now, edge, what went wrong? So what I figured is that this trade we took on the 24th, right? But if we look at the daily structure, we can actually notice that the candlestick on the 23rd, the day before that, was very bullish. As you can see here, prices created this morning star. It's crazy. So prices were actually still very, very bullish. In that trade, we shouldn't have called it. We should have waited for the daily to actually lose first momentum before we actually call the short. But I think this bullish momentum is what actually made us lose this trade. So once taking a trade on the 4 hours, it's actually a good thing that we actually refer to the daily and see what happened in the previous day so that we can actually understand who is in control of the market. So that's the lesson we can take out of this trade on the CADJPY that we actually lost. So we live, we learn. That's what's up. That's what happened. We lost this trade. I hope you managed your risk well. Now that's CADJPY. We'll see what it gives us this week. Okay. Now, moving back here, we have gold. Gold on the daily. Gold on the daily, I'm expecting to see prices keep on pushing bullish, being bullish until 1900 up here, right? And the reason for that is that from the weekly structure, you can actually see prices gave us this beautiful bullish engulfing candlestick. And after giving us this rejection of the weekly here, I can obviously say that the bulls are still in very much control. So that's what I'm expecting. See prices keep on pushing higher until 1900 up there. Okay, now we have NAS100. NAS100 last week, strong bullish engulfing. Obviously, it's in an ascending trend line, ascending wedge pattern. Let's look at it from a 4-hour perspective. Obviously, last week I told you guys it would be bullish, and that's what it did. Although we didn't get an entry because prices didn't give us a retracement to this support level where we're expecting to see prices hit before we actually buy. So we didn't get an opportunity to take the trade, but that's what's up. We can't get them all, right? And then we have US30. prices, I was waiting for them to come back and retest this support before we actually buy. Now prices just did that on Friday right here, but they didn't really hit that level, although we call this a retracement. So now prices, I believe, will be pushing higher in this index. So I'm expecting to see prices be very, very bullish in this trading week. Now let's look at volatility 75, because some of y'all have been asking me about it. Volatility 75, this is the daily structure. As you can see here, prices have been very bullish for quite a while without retracement. So the trend must be very exhausted. That's the reality. Although right now you can see that the bulls are still in control today, right? What I'm expecting to see is that for prices to actually bounce off this descending trend line here at around here, and then from here, I'll expect to see prices retrace to around here, which will be the 0.38 Fibonacci key level, or if they retrace even further on the 0.5 Fibonacci key level, to look for more bullish structure, more bullish pressure before they actually keep on heading higher. Because in no doubt, this is a very strong bullish trend, and it does not exhaust here because this is an uptrending index. So I expect to see prices keep on pushing higher. So this will just be a minor retracement in looking for more pressure for this strong, crazy bullish rally. Now, that's my view on the week, on the indices, currencies, and all that, guys. If this video has been of help to you, don't forget to smash that like button, subscribe, and hit that bell notification so that you'll be notified whenever we release content in the future. Without further ado, let's have a great trading week. Let's have a great week indeed. Till next time, guys, this was Black speaking. Peace and love.